I'm not that surprised to see the headline in your notes today that you think that potential hawkishness or less dovishness, maybe we should say, after last week from the Fed isn't priced into the market yet. What sort of extent, if we don't see a rate cut by the first half of this year, that's worth what level of pullback in equity markets?
Well, we're going to know actually something on Friday. Friday's a big number. As you know, it's the PCE number, which is the Fed's preferred inflation guide. Everybody thinks that number is going to be benign, sort of 2.8% year over year. If we get a bad number, then I think we could have some immediate cause of concern. I think right now the market is still taking a lot of comfort from what Powell said last week with the dot plot that was very dovish, that was very optimistic about cuts. If we get an ugly number and we get more Bostics out there talking about one cut, I think that is not priced into the market right now. I think would have rates going higher, and some of the more cyclical rate-sensitive names could get hit. So it's hard to put a number on it, but I think we're going to know a lot on Friday. Now, as you know, the markets are closed, so we don't get a verdict until Monday. But I think this is going to be an important week.
Yeah, that said, I mean, one could point to the fact that markets have continued up to all-time highs in recent years with higher rates. But also, just since the start of the year, Charlie, we've gone from expecting 6 or even 7 rate cuts in the marketplace to 3, and yet we're up 10%. So when will the higher rates narrative actually derail stocks?
I think when the direction changes. So you're absolutely right. But in the long run, looking 3 years from now, it's not going to matter when the first rate cut came, whether we got 3 or 6. If 3 years from now, if the consensus is we're going to return to a normal positively sloped yield curve with short-term rates more like 3% than 5.5%, then everything can be fine. There's no doubt the economy's been a little stronger than people expected, which has had the Fed be a little slower in cutting rates than people had expected. But that's good news, and that's why the market is higher. Some cyclical names, some housing-related names have done pretty well. Some of the Mohawks and building supply companies are up 20-25%, which is all based on good news. So things can still work from here. But again, what derails this all is if we get hot inflation and an end to rate cuts.
Thinking back to some of your old favorite stock names, Charlie, I'm interested, what's your take on Mosaic at the moment? Today, you're seeing a nice little bid in some commodity names. Broadly in the last couple of months, they've been doing okay, particularly as rate cut talk has come in. What's your take on that one?
Yeah, so people have the fertilizer companies have not done as well as we would have expected. We believe long-term, we got population growth still. We have a decline in arable land. And so fertilizers are a very good technology to increase yields. But it's been choppy as people think we're going to get a resolution to the war in Russia and Ukraine. Russia and Belarus are a big source of fertilizers. So Mosaic has actually not worked very well as a stock, but it's still making a lot of money, and the stock's trading at a very attractive 10 to 11 times earnings with a great barriers to entry long term.